Markets ending the week higher, the Dow hitting a record intraday high lifted by United Health. But the S&P and NASDAQ slipped as tech stocks weighed on the market. Joining me now, NewEdge Wealth Chief Investment Officer Cameron Dawson. Cameron, is the stock market overextended here, or do you think the rally has further to run?
Well, we do think that we could see some more chop and churn as we move through August. This is a tough seasonal period for stock returns, so it's all not too surprising to see a little bit of volatility. But we have to respect that the trend in the market is still resoundingly positive. There is still good momentum, and we have to balance that against things like the valuation of the S&P 500 getting back up to prior highs. So there's a lot of push and pull within this market, which is why we think a little digestion is not just expected, but is probably also healthy.
Let's take the case of someone who is loaded up on an S&P 500 fund. They're jumping up and down cheering right now because it's done very well, but suppose that they want to tinker. They want to maybe overweight some parts of the market and underweight some other parts. What do you recommend for them?
Of course. Well, we have a lot of high conviction neutrals right now as a way of almost managing risk. But we think the most important thing for long-term investors is to focus on quality. Quality is really important because it allows you to stay invested during times of market tumult. When you see stocks trade off, quality tends to outperform, but still participates in the upside. So we're looking in any periods of volatility to find those quality names that might be trading at a discount. But as I mentioned, stocks have gone up so much, there's not a lot of discounts out there.
I got to ask you about this phrase that I've read of yours, stagflation light.
Yeah.
I feel like I could pop open a can of that right now. What is stagflation light?
So it's stagflation light, doesn't taste great, less filling. It's the idea that there are hints of stagflation, almost like the hints of a flavor that you get in a light beer, that you have slightly slower growth as well as sticky inflation. This is different than stagflation heavy that we had back in the 1970s, where you had unemployment soaring higher and inflation soaring higher. But this is still a tough environment for the Fed to navigate as you have that sticky inflation and not enough deterioration in the labor market to suggest that they have to move very aggressively.
What's going to happen with interest rates in September? And for bonus credit, what will it mean for the markets?
Yeah. So we think that September is likely that we get a rate cut. The market has 90% odds of it priced in at this time, but we don't think we're going to get that big jumbo rate cut, a 50 basis point rate cut, because of the inflation data that we got this week. There's signs of that stickiness of inflation, mostly within producer prices, which had their largest 1 month increase since 2021. So that tells you that as tariffs are working their way through the system, even if it's transitory, it's a really tough backdrop for the Fed to be doing jumbo cuts. So 25 basis points cuts at best.
Earnings growth looks pretty good. What do we think for the rest of the year? For next year, what's going to happen with earnings growth?
Well, earnings have been stellar at surprising to the upside. They are running for the second quarter at 11.8% growth. That compares to 4.5% growth going into the quarter. So you're doing pretty good for the second quarter. The question is, as you go into 2026, what we see is numbers that have a lot of optimism already priced in. You have an acceleration in top line growth that's already put into forecasts, as well as over 100 basis points of margin expansion. So we're looking at 2026 saying there's a lot of good news probably already priced in.
Cameron Dawson, thank you.
Thank you.
Stocks are soaring to new highs fueled by AI despite investors' underlying economic concerns. But how long does the market melt up last, and where are the opportunities? We'll break it all down